So good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, January the 6th, 2026. Let's have a quick look. Fairly quiet session overnight. Just want to sort of continue just to look a little bit at the fallout from the situation in Venezuela. So let's look at oil, at least US oil, WTI, so not Brent. Just talking about Brent and then sort of, Middle Eastern barrels. We saw that the Saudis yesterday afternoon, they released their sort of official selling price to East Asia, and they lowered that. And that's been, again, for the third month consecutively that the Saudis have lowered the price, the official selling price to East Asia. So it looks as though the Saudis, at least, are quite sort of cognizant of the fact that there seems to be a little bit of a surplus in oil, at least in the Eastern Hemisphere over there. And so they're trying to sort of maintain market share by cutting prices. So that, in all things considered, would put a little bit of downward pressure on global oil. But let's just have a look and see here at the WTI. You can see the WTI, it initially sold off yesterday, as we saw just after the news of Venezuela, this idea that there'd be a lot more oil coming to market. But basically what's happened is that the market has understood, 24 hours later, that in fact, tens and tens and tens, if not hundreds of billions of dollars of investments need to happen, serious political sort of complexity, the infrastructure very, very decayed. And we saw overnight that the inauguration of the vice president to become president, there was sort of gunshots and helicopters and, potentially talk of an attempted coup d'etat in Caracas. So the point is that the political situation in Venezuela does remain a little bit unstable. And the idea of some sort of quick magic pill to suddenly have another million or 2 million barrels of oil per day onto global markets is a bit of a fantasy. And the reality is that that's going to take, multiple years to ramp up to anything like increased production. And also keep in mind that the oil, which is in sort of Venezuela, as we're saying, is very heavy and very sour. It requires, very expensive sort of refining sort of techniques, and not a lot of refineries globally equipped to deal with that. So I think the oil market is, that explains here, if you look on the chart here, that oil actually sort of rebounded. And it's actually at a very interesting level here. It failed here at the 50-day exponential moving average. So the 50-day EMA here, this little sort of purple orange line here. But what is interesting is that it did reject fairly robustly from this sort of key level down here at about 56 and a half. And what we can see here is that this whole sort of downtrend here, you see this downtrend line here, although it's been temporarily rejected, it's looking, this is a key level, because if it pushes out here, you've got to say that the next move up would be up to the 100 EMA at about 59.63, where there probably is going to be a little bit more resistance. So this is an interesting moment here for the bulls. If they can keep on pushing higher here, we could get a bit of a breakout. And if it breaks out, it will break out a little bit from this sort of downward trend. And you can see here that that could cause the beginning maybe of a little bit of an uptrend. What is also interesting to note is just the difference in oil grades. As I just sort of mentioned, it is important to understand what's happening with the different grades of oil. And Venezuelan oil is very sort of heavy in it's very heavy density, and it's full of sulfur and a lot of sort of nasty chemicals which have to be essentially sort of filtered out. Very similar to some of the oil in Canada. And so what is interesting yesterday is that the possibility of more Venezuelan sort of heavy sour crude oil coming onto the market and flooding, let's say, all of those refineries down in the Gulf Coast, down in the US. That put a lot of pressure on Canadian oil. So, for example, if you look at something like sort of a Cold Lake, which is one of the grades, main grades coming out of sort of Western Canada here. You can see here, I just picked this up from Bloomberg. This is the discount to US sort of benchmark. And you can see here the discount here. I mean, it has been going down, but yesterday got another sort of kick downwards, another $2 a barrel that went down yesterday. So if anything, this is putting pressure under sort of on the Canadian crude sort of suppliers. And we can look at that in some of the interesting, just looking at some of the shares. So just want to share with you, if we go to just some of the reaction here. So if we look at, let's say something like OIH, the oil field services, you can see yesterday, as I said, they gapped up a much higher. Obviously, there was insider trading on Friday. You can see here that it gapped up, and it came and filled the gap a little bit, but still, trading pretty well in the pre-market up to 312. So OIH doing pretty well. If you look at something like Halliburton as well, gapped up. Schlumberger, I mentioned yesterday, you can see that they gapped up and actually have followed through a little bit. So some of these oil services companies are doing doing very well. If we look at some of the refiners, look at the crack, gapped up a little bit as well. But what is interesting, if you then look at some of the Canadian producers, just quickly, I won't spend too much time on this, but if you look at, let's say, Cenovus, CVE, what I'm trying to do here is just to show you the different reaction. You look here that Cenovus, I mean, it's come back a little bit, but it fell quite hard. If you look also at Imperial Oil, which is IMO, we'll just look at Imperial Oil again had a big sort of push down, has come back a little bit, and basically also you have like Canadian National Resources, and let's just finally have a quick look at Suncor as well. So the point is that some of these producers all sold off quite aggressively. So a different reaction there. But it is interesting to see, as you can see, that they've come back with the general oil. So it looks as though what the market is kind of telling us 24 hours later is like, okay, we get it, Venezuela, maybe a bit more under US control, etc., etc. But the reality is that the idea that there's going to be a flooding of oil is probably not going to happen. One thing I will say though, just looking just quickly at just a different reaction in the currencies, if we look at USD CAD, we can see here, I'll just put it up here, you can see here again that USD actually popped yesterday against the CAD. So the CAD actually was under pressure yesterday, just probably on the idea of, a sort of a less, positive story for the balance of payments. And you can see here that USD CAD is actually sort of pushing higher, which hasn't been the case for a lot of the other cross pairs. So that's kind of an interesting little sub dynamic here, just to understand the spread between Canadian oil compared to the WTI benchmark, and also just the negative potential effect that's having on some of the Canadian oil producers. As I say, some of those companies like Imperial, Suncor, Cenovus, and the Canadian Natural Resources, they're all under a little bit of pressure compared to some of their US counterparts. And that in turn is putting a bit of pressure on the Canadian dollar. Okay, in terms of other stuff, not a huge amount of data. We did get some German regional CPIs this morning, which came in a little bit as expected, sort of slightly on, a couple of them a little bit higher than expectations. But overall, the sort of sense here is that German sort of inflation is becoming under control. At 8 o'clock, in about 10 minutes, we'll get the national number. That's expected to show an attenuating sort of inflation situation. So if we look at that, we can see here that the euro versus the USD, and of course, the whole point is as inflation moderates, that's going to put even less pressure on the ECB to do anything really. There's in no real sense here that they need to sort of hike rates or anything like that. And you can see here that the euro is under just a little bit of pressure. Initially, it sold off yesterday quite a lot just from safe haven demand for the US dollar. It came back, but again, after the sort of German CPI results, which are soft on the soft side, you can see here that the euro under a little bit of pressure. That's also because some of the PMIs, for example, in France, were revised a little bit lower. So it looks as though, I mean, no one wants at the beginning of the year to draw conclusions from one or two data points, but just a little bit of softness in the European purchasing manager sort of surveys there. So softness in the euro. In terms of other stuff today, let's just quickly go through some of the charts. VIX, interesting VIX grinding, not ratcheting too much higher, but grinding up, even though the ES was sort of okay yesterday. But again, ES up a little bit, just relatively stable. You see here Nasdaq again, just really you see here just consolidating in the middle of a sort of a triangle here. So it looks as though Nasdaq at some point is probably going to break out either side. Is that going to be a function of the equal weights or the Mag 7s? What we can say is that Nvidia yesterday afternoon, let's just pop this up. The head of Nvidia, Jensen Huang, had a sort of at the CES conference in Las Vegas spoke. You can see in the pre-market, let's just go on a little, let's say like 15 minutes or something. You can see here that initially there was sort of a lack of enthusiasm, but it is up a little bit. You see in the pre-market up to $189 here. And that's just because he mentioned that there was strong demand for the H200 chips, so not the top tier chips, but the H200 chips. From China, there was strong demand. He also mentioned that there was sort of progress on the newest generation of chips, and that would be beneficial for sort of robotics, for self-driving cars. But it did have the sort of the sense, there seemed to be a little bit of a lack of enthusiasm, no sort of massive new breakthroughs. It seemed to be more of a consolidation and a continuation sort of a feeling rather than sort of exciting new breakthroughs. But the market, nonetheless, not too negative. And if we actually just look here, just at how the market traded here, you can see that. As Jensen was speaking, there was a bit of excitement. Then it sort of came down, but gradually overnight the market's just was grinding high. So we'll see how that sort of works out today. In terms of other stuff, we see the Australian dollar. Let's put it back to the daily chart here. The Australian dollar has been very, very strong against the US dollar and also a lot of other cross currencies as well. We see here just tipping out here, just sort of having a bit of a pause. It's going to be pretty key. Of course, this evening at about 7:30, we do get the monthly what is it? The CPI numbers. We get the CPI numbers, and keep in mind that the RBA at their minutes, which were released at the end of last year, just before Christmas, the RBA is signaling some concern about inflation, and the market's even saying that maybe at some point they might even have to think about hiking in 2026. So that's one of the reasons that the Australian dollar has been quite supported. So we'll have a look at those CPI numbers, and if that's strong, that would possibly put more upward pressure on the Australian dollar, which is doing pretty well. But the big story overnight is really the gold and the silver, the precious metals continue to go very well. So you see here that we had just basically a pullback, but you see here the gold is looking as though it wants to go a little bit higher. You can see that it's broken out of this sort of range. Obviously, let me just clean that up. And then the next question is, well, where can this go? Because the point here is that, if you believe in the debasement theory, central banks still accumulating, probably going into the midterm elections, we can assume that the Trump administration wants to keep on pumping the economy. Could we have a slightly overly dovish new chair Fed coming in May, who may be sort of cutting where it's not really necessary and actually cutting into a relatively strong US economy? All of this stuff potentially could put downward pressure on the US dollar, and less Fed independence could be, plus we have geopolitical sort of uncertainty seems to be an ongoing thing. So the question now here, this is all good for gold. So the question is here, where could gold go? Now, if we just do a couple of sort of, Fibonacci extensions here, we can see here that we did, just on this one, we did reach, the first sort of level here, and it came back down. But this has automatically been bought. And again, just to put this on a fib, kind of retracement here, you can see that this was bought very, very strongly here, just on the 38% fib, and it's looking as though it wants to push up. So therefore, the next move high would say, well, let's do a shorter term kind of fib extension. And you can see here that on gold, this is the spot price, by the way. You can see that the new targets, maybe if we align it with the longer term targets, you can see that, certainly something like 4,800 is not out of the question. Definitely we can retest the highs and maybe push a bit higher, extend that to 47, 4,800 up there is not at all out of the question. Similar kind of situation here with silver. As we know, silver had been on a tear. Again, that was overextended, but again that was bought on the Fibonacci sort of retrace here at 38%. Strong price action. So where could that go? Again, we could put it on a shorter term one, depending where you want to sort of measure here from. But as a potential target, you're looking. I mean, this is starting to get a little crazy here, because you're starting to push maybe even up into that magical 100,000, which is quite extraordinary to see what's going on here. I'm not sure it's going to get up to that, but certainly a push up to the recent highs of, let's say about $84 is a possible. We'll see how we go there. Other thing as well is that copper trading very technically beautifully here. There's been a lot of hoarding. There's sort of some concerns that the US has got to, designate copper as sort of a sort of a mineral of interest, of national security importance, and therefore there could be some kind of tariffs imposed on it and controlled by the US government. So therefore, a lot of copper is being sort of hoarded, or at least stored in the COMEX exchange in New York. Excuse me, just grab some tea here. And just look where copper went. It had a big breakout day yesterday, just testing that recent high. But look at that, traded perfectly to the tick to the recent high at 6.11 per pound here. So the question here is that what happens? I mean, we've achieved the measured move. You can see here the measured move, and which coincided perfectly, with the 1.618, which the recent high. So if we get rid of that, I guess now what we have to say is, what happens. So I suppose one way of looking at that, I mean, it's due for just a little bit of a retracing. You can see it's already retracing overnight here. Probably the next thing to look at is this level around about 5.89, something like that, which will be the 0.38 fib retracement. Let's see what happens to the bulls here. I mean, if it can't even get back down there, that would indicate a strong bull market. But basically, all the metals, industrial and precious, really are starting the year off on a tear. And I also just want to draw your attention to, let's have a look here. Let me just think where I've got this. Sorry, I've got aluminium basically. So yeah, here's aluminium. So if we look at just look where aluminium is going absolutely crazy. We've got Alcoa here going absolutely parabolic, well above all the moving averages. And again, just on this idea that there's sort of smelting constraints, a constraint on the production, and potential sort of tariffs by the US and whatnot. So the question here, this is looking interesting. You can see pre-market down a little bit. I'm starting to look at this as a potential short. Always difficult or to think about where to short these things, but this is going a little bit crazy. If you look at Alcoa here, it's above. I mean, could it go higher? Yeah, for sure. It has been higher going back into 2022. You got all the way up to about $90 or so. But just on the short term, this is very, very oversold. And maybe if it gets a little bit higher, up to 65 or so, could be an interesting short opportunity. Other players in that space, you've got Century Aluminium. Again, very, very strong performance. You've got CSTM, how do we pronounce it? Constellium, which is starting to push off, and Vedanta as well, all very strong. So some of them are going parabolic, but the aluminium space, very, very strong, and metals in general, very, very strong, which, by the way, is helping the Australian dollar, which generally likes industrial metals. When industrial metals and precious are doing well, that's pretty good for the Aussie dollar as well. So apart from that, guys, I think I'll leave it there. As I say, equities, just we'll see what happens with Nvidia today. Not a huge amount of data. As I say, we just have the German CPI for overall at 8 o'clock, but that's expected to come in a little bit on the soft side. For those of you who follow oil, we have the API inventory numbers coming up at 4:30. That's something I'll be keeping an eye out for. And I believe that Trump is speaking today. I know he's got a meeting with the sort of the Republican caucus. There might be a bit more detail coming out about his plans and intentions for Venezuela. I'll leave it there. Have a great trading day. I'll be back tomorrow with a macro snapshot. Thanks very much.